Okay, fine. Now this is an IPO which came in 2020. Okay, and it was an IPO announced by Mrs. Bector Food Specialties India Limited or Specialties Limited. Okay, this is a company which makes biscuits, Kramica biscuits, English oven bread, and many other buns and other things which are being commonly used by us in our houses. So this company gave in an IPO. हाँ कोई बात नहीं बता चुका हूँ I know that there were many students who are not there and now we are going to complete this. I told you last time if you remember I told you that we are just briefly touching it and we will go little deeper next time. I think you have not heard that. Okay? So please listen. Okay. So this is a company which is in bakery, biscuits and products, and they are supplying to McDonald's and their buns, burger buns, and to KFCs and everything. Okay, and its main, one of the very famous product is Kramica biscuits, which we all have, taken in our life. Okay, and English oven brand, which is a bread. Now, the IPO was 100% book build. 100% book build. So now, if you want to understand what is a book build, so you can just go to Google, okay, and say book build or say 100% book build, whatever is written here. What is the meaning of 100% book build? ये तो वहाँ आ जाता है हमेशा, इसको मैं बंद कर देता हूँ और okay. So if you read this, okay, just read this, read in your mind, okay. So I'll just tell you, it is basically a process, okay? It's a process through which company determines what it should be the offer price, at what price it should offer shares to the public, okay? So they have not decided, what would be the Shruti, please, you keep disturbing. So the company is yet not decided what will be the final price at which they are going to issue shares, okay? So they are in dilemma. And they don't know what price it would be the right price. So what they do, they announce a price band. Okay, like suppose it can be 100 to 120. Fine. So the band has to be within the range of 20%. Fine. The band has to be within the range of 20%. The upper end and the lower end. Suppose lower end is 500. Then what will be the upper end? What will be the upper end? 20% more than this. How much? 600. 600, simple. If it is 500, then the upper end has to be 600. If the lower band is 200, what will be the upper band? 240. Is that okay? So that is the requirement of SEBI. Maximum width of the band can be 20% more than the lower band. Then the band can be kept as low as the lower band and upper band difference should be, minimum difference should be 5%. Okay. If suppose the lower band is 100, then the upper band has to be 105. Minimum. It can go up to 120, but it can't be 100 and 101. It can't be as narrow as that. Okay. Fine. That is the requirement of the SEBI regulations. Security Exchange Board of India says that the band should be maximum 120% of the lower band, okay, or it can be 5% of the lower band, minimum, or 20% or 5%. Is that okay? Now, once the band is decided, company will announce that band, okay, and will publish that band in their prospectus. okay, or the offer document. It's called offer document, which becomes ultimately prospectus. And before the final price is given in the prospectus, not the band, but the final at which they are going to issue finally the shares, up till this time it is called red herring prospectus. It is called red herring prospectus. It's a famous term. It's a very famous, whenever in the newspapers they announce that we are going to, come up with an offer, they say red herring prospectus. Why it is red herring? Because the offer price is still not been finalized. Okay. Once people make bids and the company decides about the final price, then they publish a prospectus and file it with the company's register of companies and the SEBI and other things. Final prospectus. Is that okay? So till the time before the final prospectus, which carries the final price at which the shares are going to be allotted, it's called what? Red herring prospectus. Now you can just go into your Google and say red herring prospectus. Just go. So it's a very, very common thing and well known, and of course you people are in the final year and you should be, many of you or your families are, applying for IPOs or FPOs, and you must know this term. A red herring prospectus is a preliminary unofficial document filed by company before an IPO that provides detailed information to potential investors about the company. Karte, its business, financials and risk, but omits crucial specifics like the exact IPO price or the number of shares. Because if the company cannot tell the price, it can't say how many shares they are going to issue. Unless the final price is fixed, then only the number of shares can be calculated, isn't it? The overall company knows that this is a 5,000 crores or 500 crores of an IPO or an FPO, but they can't say how many shares and how much, will be the value per share. Okay. This is only determined after the book building process is over. Okay. The book building process is carried out with the help of Bombay Stock Exchange and National Stock Exchange. They have a kind of a mechanism through which will carry, whole details about the IPO of all the companies. Whenever the company is announcing an IPO, it has to give all the details to Bombay Stock Exchange and National Stock Exchange. And they have got a software in which they are going to enter the details of the company. Okay. Once the IPO is open, okay, and people start making their bids, because if the range is between say 100 to 120, so many people are going to apply at various prices. Some are going to apply at 100, some are going to apply at 110, some are going to apply at 120. Okay. Now company gets all the applicants who have applied and then finally finds out at what price they are getting 100% of the money which they intended to get. Okay. So it's called at what price the book cuts. Okay. When the book cuts at say 115, that means now at 115 rupees they have got all the money what they needed. So 115 will become the offer price. Fine. So anybody who has offered 115 and above will get the shares of the company. Okay. Anybody who has applied and offered 115 and below 114, they will not get any shares of the company. So 115 or 120 के बीच में all the money, like company was doing for 100 crores and they have got entire 100 crores for all the bids of between 115 to 120. So the final price will be 150. Even if I have applied for 120, I will get my shares at 150. अगर मैंने 120 में अप्लाई करा था तो मुझे कितने का मिलेगा? 115 का. Because that is the price. That's the price at which lowest price at which they have got all the money which they have intended to get through the process of an IPO. Now the stock exchange is going to keep a track, okay, and will keep giving real-time data to the investors. So if I have applied, I can just see that how the IPO is going, how many people are applying, what are the bidding process happening, how many people are applied at what bid levels. Suppose I want to change my bid, because suppose I have applied for 110, I know I'll miss out. So I'll check up my offer price to 150 or 180 so that I get a good chance of getting the offer to me. Okay. So Bombay Stock Exchange publishes the real-time information for all the IPOs and FPOs which are happening at particular time. So that when I have applied, I can always change my offer price at which I am bidding. So I get a chance to review my application. I can always say that no, I have applied at 105, I'll go for 117 or 118, so that I get the shares. Is that okay? Now coming back to this thing, so this is a process through which the company decides what will be the price. Okay. Now coming back to this, to your table again, so 100% book build. So that means they are saying that all the applications will be done on 100% book build. Okay, fine. It's normally 100%. It can't be like 50% on book build, 50% the fixed price. No, 100% book build. So everybody is going to make an offer, and company is going to receive those offers. Okay. Now all the merchant bankers or the investment bankers, they are attached to this process. Okay, fine. And they are going to see the company has, getting all the applications, and they are going to finally determine what price at which the company is going to issue shares. So it's a job of the merchant bankers or the investment bankers like Merrill Lynch, JP Morgan or ICICI Securities. So they are all involved in this process. Okay, fine. So whosoever has been appointed as merchant bankers, they are going to review the whole process, and that is their duty to see all the obligations, all the provisions which are mentioned by SEBI, they are complied with. And they have to give a certificate to SEBI that the money has been received by complying with all the processes. Is that okay? So there is a separate subject which is called investment banking, which I teach in Shiv Nadar currently, along with the valuation I am teaching here. So issue size was 540 crores. So this company needed 540 crores. Okay, fine. And the fresh issue was only 40 crores, which means that there were some investors, when the company started, they invested into in this company, and now they want to move out. So there were already some people, some shareholders who had given money to Mrs. Bector Food Specialties, and they found that it's the right time that they should exit from the company, because they are now making profits. Company is a profitable company, and they want to encash and book their profits. Okay. Now startup companies, many of the people like venture capitalists and the people who invest at the time when nobody puts money into those companies because they are startups, and there is a lot of risk involved in those companies because these companies may lose all the money. So they wait till IPO. At the time of IPO, they will try to exit themselves out by offering their shares to the public. So 500 crores were offered by the venture capitalist or some shareholders of the company who wanted to move out of the company now. Okay. So this is called offer for sale. So this is called offer for sale. So offer for sale was how much? 500 crores. By offer for sale. It's called OFS. Okay. Now during your interviews, some people can ask, what is offer for sale? So offer for sale is basically shares offered by promoters or the investors, strategic investors at the time of setting up the company. They are now finding a way to exit. Karthikeyan, they are finding the way out to exit. Each time I take a name of somebody, he is going to lose some marks for his project or other things. So this time, offer for sale is basically what, Karthikeyan? What is offer for sale? Who are the people who are exiting? Any idea? Promoters and it can be promoters or it can be the venture capitalist, who had given money at the time when company was not getting anything from anywhere. So they helped the company to bring to a certain level, and company is not doing good amount of sale. So there were 500 crores being offered by promoters or promoter groups, and price band was 286 288. Okay. Now if you see, the difference is not even 5%. So this is in violation of SEBI rules. That means the upper band and lower band, upper band can be should be 105. Okay, fine. So then I checked, how Bector could get a band which is not matching with the SEBI criteria. Okay, So, I found out through AI, and they found that they had nothing to, show up. They said maybe that they have applied to SEBI for this band and SEBI has given approval. So, it's a mystery. So, we don't know. Fine. The band should be 286 into 1.05. That should be the upper band. Okay. But here it may be coming to 290 or something. But this band is not meeting the 5% minimum criteria. So, that you can just look at, maybe they got some kind of an exemption from SEBI, or they applied for this permission, or maybe this band was announced at the time when 5% additional minimum band was not even announced. Initially it was 100 and 120, and the 5% came little later. So, we need to check that. But I think the 5% regulation has kicked in, and they announced it at that time only, and they were not meeting that criteria of SEBI. But anyway, so I have mentioned that also in my document here. Face value was how much? 10 rupees. The face value per share was 10 rupees, and they were making an application for 286 to 288, and finally we'll come to know that the share price was fixed was 288. So, they got all the money at 288. Now, if you check what is the price of Bector on the stock exchange, Shruti, just check. You are not there. Check, because this was 2020. What is the price today on the stock exchange? Yashika, anyone? Just check and let me know what should the price.
15 plus.
What is the price of Bector Foods?
1370.
Huh?
1370.
12?
1370.
1370, something like that. Okay. So, that is the price at which this company is today trading, and they have issued shares at 288. So, people who invested in 2020, in 2025, the share is hovering around 1377. Okay, whatever. So, 70. So, if suppose you would have got the shares at 288, you have been sitting on profit or loss? Profit. So, that means since this share had given a lot of value to the shareholders, isn't it? So, people who had applied, they have become, they have gained a lot. Okay. For example, if you want to check, for example, I'll just tell you how to check that. Okay. So, the price at which it was there, and today what is the price? 1370. Okay. And in how many years? In 5 years. Okay. Ansh, please focus here. 5 years. So, we want to know how much return you have got. Okay. So, what I do is I go to formulas to check how much return you are getting. Okay. So, okay, rate. So, what should I do? I go to rate. RATE, rate. Okay. So, I have done this. Fine. So, NPR, what should I write? 5. 5 years. NPR stands for number of years. And present value was minus 288. That means you had invested 288 and it has become now 370. So, the first figure should be given in minus. The logic is that this is the money which has moved out of your pocket, you have invested, and you want to know what is the kind of return you have got. So, what is the return investors have got? 37% per annum. Okay. Is it a good or bad? You get on fixed deposit, you get 7%, and here you are getting 37% compounded annual return by putting your money in this company. So, it's a phenomenal return the shareholders have got. Okay. So, coming back to this. Okay. So, the issue opened when? Issue opened on 15th of December and closed at 17th of December. Okay. How many days? 3 days. Now, issue can remain open for maximum 10 days. Okay. And minimum 3 days. So, they closed down the issue on the third day itself because they have got entire money what they are looking for. Okay. So how many days are allowed by SEBI, Yashika? How many days are allowed by SEBI otherwise?
For what?
For the issue to remain open?
Okay.
10 days. But they closed down within 3 days. So because they got all the money. If they would have not got the money, they could have kept it open till the 10th day. So please listen, I can ask question. Okay. And if you don't answer, again the marks will go down in your class participation. You have suffered a loss. Okay. Then the listing date. Now they will announce on what day the shares will be listed on the stock exchange. Okay. So 24th of December, the Bombay Stock Exchange or the National Stock Exchange, the shares were listed for trade. Is that okay? Then the listing exchanges were National Stock Exchange and Bombay Stock Exchange. Okay. So on both the exchanges, these shares were listed, and the name of the promoter was Mr. Anup Bector. He was the owner of the company at that time. Now, the BRLMs. Now, BRLMs means the merchant bankers or book running and lead managers. Just type this word on Google, who are BRLM, okay, and what is its full form?
So are they the type of guarantee?
No, I'll just tell you. So they are called book runners and lead managers.
Running lead manager.
Because they are called book runners because they are tracking the book built from the stock exchange. There is a software which is getting all the applications, so they keep a track. Okay. Now all the people who want to apply, they will go to the BRLM sites and punch their orders, either physically or online. Like suppose if I want to apply for this IPO, so either I will go and get a form from the market. So I have to give this to SBI Caps and ICICI Securities or their counterparts. So whomsoever they have said, okay, you go to ICICI Bank and give your this thing, okay, or go to HDFC Bank. So they are going to advise where you have to give your physical forms, or you can go to the sites and apply, make an application there. Okay. So they are called book runners and lead managers. Have you got it on a Google? Book runners, and so they are called merchant bankers or investment bankers. And who were the investment banker? SBI Cap and ICICI Securities. Okay. So these were the two merchant bankers who got involved. Then objectives of the issue. What was the objective? Financing expansion of Rajpura biscuit factory. Now Rajpura is a place in Punjab where they wanted to expand their biscuit facility. General corporate purpose, for the general purpose of meeting out some corporate expenses, and then partial exit for private equity investors through OFS. That means the people who had given money, venture capitalists or private equity players, they wanted to exit. So that was the purpose. Then basis for offer price. Then they have to tell how we have decided the offer price. Once the company decides the offer price, they have to give justification to the public through the offer document, how they arrived at the offer price, right? So that people know, because as an investor, because this company has yet, suppose we are before 2020, okay, suppose we are the 2000, assume that this offer has yet not been open, so maybe the share would have been trading at 150 rupees and I would be sitting on a loss. So before I make an application, I must know how this price has been arrived at. Okay, so that I can take an informed decision, whether I should apply or not. For example, if you look at Paytm, how much they have offered. Just look at the Paytm offer price. Find out what is the Paytm offer price. Somewhere around 2000. Just find out. Just find out. Huh? 2150 was the IPO price. And what is the current price of an Paytm share price? Huh? 1000? 1200. So are you making loss or profit if you have got your shares on IPO of Paytm at 2150 and today the price is what? 1050?
1261.
1261. So are you sitting, have your price, I mean money become half, isn't it? जिस पे आपने अप्लाई करा था और अभी हो गया आपको 50% लॉस हो गया, isn't it? Fine. So that means the people who are going to invest, they are going to look at the company's IPO and understand how the price has been arrived. They have to justify. Maybe the Paytm might have also justified, okay, but it misfired. Okay, why it misfired? Because they were doing a lot of business which they are not permitted by the RBI. They were almost working like a bank, and they didn't have a license to do that.
Unsecured loan.
Yeah, so they were giving loans, they were collecting deposits, so they were not allowed to do that because they should be a full-fledged bank to do that business, and they had not taken that. So we can always look and why the share took a big knock after the RBI halted the operations for some time. Okay, now so company has to give factors, qualitative factors and quantitative factors. So two factors they should mention: qualitatively how the company is good, and quantitatively. Qualitatively, strong brand, biscuit brand. Okay, Kramika in English. Diversified business model, biscuits and bakery. Extensive pan-India distribution network. So they are spread across India, and automated manufacturing facilities, professional management with deep sector expertise. So they say that their family is into this business. They are a strong brand. They are present all over India. They have a good network. Okay, distribution network, everything. So they are very good in terms of quality. Riya, please focus. Now we come to the qualitative factors. Quantitative factors. Okay, so quantitative factors were earning per share. So first we look at how much the company is earning per share. Okay, fine. So it was 3 rupees and 16 paisa, and the P ratio based on this price was coming to 91.14. So here the company share is, there is no market price. So the formula for P ratio is what? Market price divided by EPS. So there is no market price. So market price will be calculated at the lower band as well as the upper band separately. Okay, but then it has been calculated at 288, which is the upper band, because this was the final price at which the shares were allotted to the public. Okay, fine. So they calculated the P ratio was coming at 91 at the base of 288 at which the share was fully subscribed. Okay, fine. So 91.14 P ratio. Is it highly valued, or this thing is? Tell me what was the P ratio of Ultratrack or cement companies? Close to about 50.
But it will depend on the competitors who is price. We will have to see which the competitors the P ratio.
Absolutely, competitor. So you have all done that. So since you are doing the exercise, so you know that we have to look for all the companies which are in the same industry. We can't compare with cement company or other company. We have to compare with all other companies which are in FMCG products. Okay. So if you look at Mrs. Becker, Britannia, and Nestle, and the fourth company which is called DFM Food. So these are all the comparative peers. Okay, fine. So there the earning per share is given and the P ratio is given. Okay, of all the companies. Fine. So if you find that the P ratio is the second highest, one company which is listed is DFM Foods. We don't know what it is. Okay, and this company is having a P ratio which is very high, very high, even higher than Britannia and Nestle, which are mature players, which are very good players. Okay. Now the P ratio can be high and justified only if the company is going to grow at a much faster pace than its peers. Fine. अगर company की growth in earning per share is dramatic, it is going to grow at a very high pace, then only a high P ratio is justified. Now tell me here, when the high P ratio is justified? Under what? If the P ratio is very high, so when you will say that P ratio is okay? So now it's okay. But in this case, if you compare the competitors, you find still it is higher. Nestle and Britannia is lower. we calculate the PEG ratio. Either we calculate the PEG ratio or we calculate the forward P ratio, 1 year forward P ratio, to find out is this okay. So PEG ratio means the P ratio divided by the growth in EPS, or the forward P ratio would be the price divided by the next year's earning per share. अगले साल का earning per share कितना हो. So there are two mechanisms through which you can calculate and see whether this P ratio would be justified or not. What are those two mechanisms? Just tell me that.
PEG ratio and forward.
Absolutely, very good. This is the first time you have given a direct reply. That is good. I am happy with that. Otherwise, you will have some other reply. But anyway, some other reply is always good and welcome. Okay. So how do you find out whether the high P ratio is justified? What do you do? क्या करते हो आप? PEG ratio and forward P ratio. Forward P ratio formula is the current market price divided by the next year earning per share. If you do that, okay, then we will get another P ratio, another version of P ratio. And this P ratio is called trailing P ratio. This is called what? Trailing. So you all have calculated the trailing P ratio, okay, in your projects. But you can also calculate a forward P ratio for this one, okay, which will be taking the current price divided by the next year earning per share. Okay. So based on that or the PEG ratio, you can come to know whether this price is okay or not. If it is okay, then a high P ratio is justified. But if it is not okay, then the share is overvalued. When the share is overvalued, do you buy the share? No. So you say this IPO is not going, we are not going to subscribe. Now what happened was that we'll come to know that this shares were taken, the retail participation was very high. The institutional participation was not very high. Okay. Rather the institutional should have gauged that this company is going to do very well, but the retail people, they said this company is good and we are going to get good money. And how they got convinced, we don't.
So because during the COVID times, FMCG was the only sector
which was doing well.
Shop group.
Yeah,
So
which was doing well, so people were still buying.
So every retail
Okay. So anyway, so now the P ratio, return on net worth, which is nothing but return on equity, which is 12.17, which is not a great number. Okay, fine, but it can be justified if the company has put a lot of money and they are going to generate higher return, more than 15% or so in future. Then book value per share, which is called NAV per share, was 26. Offer price. Okay.
Also, sir, we have a test in the next class. Instead of giving a break, you can end the class early.
Just hold on. ये कहाँ चला गया? You have next class?
We have a test in the next class. Instead of giving a break in this class, can
हाँ.
end the class early.
Okay, just we are going to finish off in 5 minutes.
Okay, sir.
ये आ गया क्या?
So minimize कर दो.
Oh हाँ, sorry. Fine.
सर ये शेयर कर दो.
हाँ?
शेयर कर दो.
हाँ, share कर दो. And then we have the listing performance. Listing price was 500. Listing gain. Now the share price got listed at 500 rupees. When the share price finally was listed on Bombay Stock Exchange, it appeared at 500 at that time. So a 288 rupees share price went up to 500. So there was 74% gain over the issue price. So extremely positive. IPO was oversubscribed 198 times. Okay. So 119 times oversubscribed. Especially strong in retail and NII segment, non-institutional investors. So there is, retail and NII. NII means non-institutional investors like, HNIs, high net worth individuals, okay? Those who are not an institution.
Angel investor.
Huh?
Angel investor.
Angel investors, they can be also NIs possibly, So we have, like this. Then regulatory compliance. So, while the band, this is like the band, this thing. So it was not meeting the criteria of the band requirement, okay, which I mentioned here. So IPO was still allowed to proceed likely with SEBI exemption, though no explicit public document is found. Key takeaways. Just read this, the last document, and we are through with that. Aggressive valuation justified by growth potential and sector industry. Strong brand exceptionally high subscription showed robust demand, especially in a post-COVID, consumption rebound. As what you are saying, the regulatory price band exception reflects SEBI's flexibility for high demand offering. So the SEBI has allowed this band despite it was not meeting, and that's all. Okay, fine. So this is what we have done about this thing. So our knowledge about relative valuation was applied here. So you have to choose IPO, FPO. So I'm going to give you a link from where you can get all the IPOs which are about to come or the past IPOs. Okay. Then you start